Stephen Alain Lawrence is CIO of Balfour Capital with over $350 million in assets under management. A very good morning to you, and it's so lovely to have you here in the studio.
Thank you. I'm glad to be back.
Given everything we covered at the top of the show, could we potentially be in for what could be a volatile week ahead given the event risk?
No question about it. I think the volatility is actually just beginning. The markets, what you have to understand with the markets, it's all about perception, psychology, and timing up to a certain extent. So it really depends on the sector. I mean, you could see you could easily see the market come off 3-4%, 5%. And it doesn't mean that it's in a bear phase. It could actually be just going higher. There's always some sort of retracement.
When you talk about timing, of course, we've got the US jobs data out this week. We just had the inflation print out last week. As you heard, they're potentially raising hopes now for a cut in September. Is it just going to take 1 month of data?
No, I don't see rate cuts. Matter of fact, I think rates can actually go higher. Okay, and that what you need to understand is rates are priced into the market, okay? And I don't see a soft landing. Some other investment bankers do. I don't. Guys like Jamie Dimon doesn't see it. I agree with him.
I think Sherry's going to jump in with a question.
Yeah, thank you very much, Sam. Stephen, good morning to you. This is Sherry joining the conversation out of Hong Kong. So it sounds like you don't see a cut this year, but as long as we don't get a hike, the U.S. markets will be fine, because it certainly looks like the market is taking bad news for the economy as good news for the markets, at least for now. How long does that continue?
Well, what you're seeing right now is you're seeing high default rates in certain sectors of the U.S. market, especially the commercial back sector in real estate. Okay, it's having a problem in the U.S. We've seen that. We've seen some major funds halt redemptions, and these are very seasoned investors. So there's a lot of decoupling in certain specific areas in the U.S., like in any other market.
You've grown more bullish on China. Does that say somehow that the U.S. market is looking expensive to you?
The U.S. market, it depends on the sector, and it depends on what you're buying. Okay, you'll always find quality in a bull or bear market. So it's really the knowledge of what you buy. Okay, and as far as China, I'm ultra bullish. There's no question in my mind, okay, that the Hang Seng will go much higher. Okay, much higher.
How high, Stephen?
Over the next, I'd say between now and the end of the year, above 20,000. Okay, we've been long since 15.5. Okay, over the long term, over the next 5 to 10 years, 50.
Positive on China seems to be sort of a more growing consensus there in the market. But I mean, what are you looking out for in terms of some of the constraints around monetary easing in China, of course, with the uncertainties around the Fed, but also in terms of what they're doing in the property sector?
70% of all the wealth was created in property in China. Okay, but what you're going to see is that they're innovative and the country understands cycles. That's what they're really starting to understand. Okay, that's why you're seeing value in tech, in solar. Okay, they produce more electric cars than anybody in the world. Okay, they just built BYD just built a plant in Mexico. So it's not, and they need that plant in Mexico eventually, hopefully one day, to get into the U.S. and capture part of that market. But they need it for South America.
If they don't face tariffs in those third countries?
Highly unlikely, okay, in my opinion, highly unlikely, because they need the vehicle. And, the entire electric space is going through a major transformation. And that's what the market's trying to figure out right now, in my opinion.
And yeah, and let's talk specific names here. Are some of the companies that you've invested in: China Resources Power, Mengniu Dairy, Li-Ning, Longfor Group. But what's really the time horizon that you're talking about here? Because they may be performing, they may be some of the top, best performing sectors over the last 60 days. Are you being tactical with these names and perhaps see an exit by around the time of July plenum meeting?
I'm seeing companies like Jinko. I own Jinko, and I think Jinko could go much higher, okay, in the solar sector. And I'm also looking at different ETFs, okay? Because what the investor needs to understand and the public needs to understand is there's a way you could diversify without holding one asset. And I think that's the most critical thing that I tell any investor. You don't ever own too much of anything, okay? You're much better off owning a little bit of high quality things, because over the long run, you'll be able to take the ups and downs of the market.
What about India? And of course, we are counting down to the election outcome results out to later this week. I mean, what are some of the sectors do you like? Infrastructure, real estate, they seem to be popular. Are they crowded, getting crowded, expensive?
Let's say this, India, it's its own world of investing, okay? With the creation of Gift City, it allows institutions like HSBC, JP Morgan, all the big boys to actually go in and actually compete. What you also need to understand with India, in my opinion, is that it's truly about infrastructure. You can't compare the infrastructure of China to India yet, okay? India will catch up. All right, but they're not there yet. However, intellectual horsepower, okay, they can go head to head, no question about it. You have two societies that are hardworking, educated, and getting smarter and understanding the diversifications of all the global markets. But it's going to come down to execution. And as of today, China has better execution in certain sectors, and India has better execution in certain sectors, like BPO, okay? The BPO in India is superior to that in China, but some of the manufacturing capabilities are superior in China as opposed to India. Companies like Tata Power, it's all going to be about companies that can invest in India, like Fluor, and they have to be able to grow with EV, okay, and opening up the system, all right, and opening up the system. And I think that's the biggest thing. How do you open up the system to foreign investors? I think Modi's done an admirable job, but I also think that, the BJP is, they're doing their thing. They have to do what they have to do. I mean, it'd be nicer if they can get an election results less than 6 weeks, but we don't control that.
Yeah, and you wonder if some of that opening up is going to attract the attention of the US, like the pressures we've seen on China. Stephen, that's all we have time for today. Thank you so much for joining us.
Let's bring back Alain Lawrence of Balfour Capital and continue talking about markets. But of course, let's squeeze in the geopolitical angle into the conversation as we're counting down to the November election in the United States. All this overcapacity narratives and tariffs, is that going to spook investors and markets as we are getting ready for the election? And are you going to see that as a buyable dip for your portfolio?
The geopolitical events, they always have a way of working themselves out. What you're seeing right now, and when I spoke before on the show, with a high level of certainty, the U.S. and China are going to be closely working together because they just simply need each other, okay? And what does that do as far as the market? Once again, you have to find value, okay? And there's a lot of value in certain sectors, especially in the energy sector, okay? And the EV sector.
Mm-hmm. You seem to see a lot of value in the Hong Kong markets. I mean, you think the index, the Hang Seng Index, could surge to 50,000 in the next 5 years. What's going to get it there?
5 to 10 years. Okay. What's going to get it there? 5 to 10 years. Okay. What's going to get it there is retail is back. Okay. China is slowly getting back online, and what's more importantly, you're seeing high quality investment banks out there like CICC. They do some tremendous deals. But retail is back there, and it takes time for retail. And also, U.S. institutions are back. and they're interested. And they're in it for the long term, not the short term. That's what I see as far as the theoretical propulsion of the index running to at least between 20 and 22,000 within the next year, possibly even higher.
Stephen, I want to ask you about something that's been going on in China. There seems to be sort of two stories happening here. And I put this to a couple of people, but I want to put it to you as well. China is desperate for foreign investment, and there's no ifs or buts about it. I mean, President Xi's even been in San Francisco sort of trying to court foreign dollars as well. And he also held that meeting with some of the executives in March at the China Development Forum. We've also had Li Qiang, who's just been in Korea, sort of saying to the likes of Samsung, hey, look, we welcome your investments here in the country. But at the same time, we know that China is trying to wean itself off foreign technology and replace it with domestic alternatives. So back to our conversation earlier in the program, you talk about opportunities when it comes to innovation. How convincing is this sort of domestic focus, but still trying to attract foreign money into that narrative? Can you help us join the dots here?
Well, if you look at the flip side, somebody like somebody like Jamie Dimon went to see Xi, and the relationships were tight. Okay, they were quite strained, and that wouldn't have happened if an institution like J.P. Morgan didn't feel they're actually expanding in China. Okay, so every government always wants to have control over certain assets so they can grow their economy. It's the same thing in the U.S., and that's where the negotiations are going to come in, because you'll see the U.S. needs them, they need each other, and they've got to be able to compromise on how they can make money. Period. End of story. It's really about how both parties can come together and say, I have a deal. And that will happen. You're seeing it, actually.
And you've had Apple slashing its prices in China. That seems to be helping out sales for now. You've got NVIDIA that's also been discounting its chips, as I mentioned at the top of the show, the ones that they made custom for China to circumvent some of those export controls. And then you've got Elon Musk, who sort of backflipped on the way that he views tariffs, and also teaming up with the likes of Baidu. So what is this corporate commitment from America Inc. telling us right now?
It's telling us that they want in on the market, meaning America wants in. And on the other side, it's the Chinese want in, okay, because they like the innovation of the United States, all right? And that's really the key. And it's all going to be about how they can negotiate that in various sectors. Tech is going to be, tech is big, but at the same time, you're going to see in a place like China where you have a large elderly population, and that's going to actually become a very, very large market for them, okay? Because the U.S. understands how to deal with an elderly population. All right, so a lot of times what you're going to see is that China will understand some of the processes that the U.S. uses for the elderly community. And I think that's going to be a major factor over the next decade.
Sherry.
Stephen, I want to zoom out a little bit before we let you go here. Last year, you beat the market, the industry, with an average of 50% of return across 3 of your funds. How is 2024 looking so far, and how is this year different from last year in terms of how you look at each market or strategize, and in terms of what's really moving the markets? Is the market sort of moving away from the rates story and perhaps going into individual stock picks and markets?
A great question. It's always about the individual stock pick. All right, but using the other alternative products with it, okay? So you could be long ConocoPhillips, and you could own a small portion of an ETF to be diversified in other energy companies. And understanding that nothing goes straight up, and it's truly about diversification. To answer your question precisely, what do I see in 2024? Immense volatility. Immense. The next 120 days, 180 days will be monumental in various markets. On a geopolitical level, on interest rates, and on a lot of potential tax incentives that they need to, that both countries are actually trying to work out right now. So it's going to be a complicated time, but when there's uncertainty, okay, you know, historically, that's when you buy. Okay. But you need to know what to buy. It's all in the buy.
Stephen, it's been such an insightful conversation this morning. We're actually going to let you go this time. It was a false alarm last time.
Okay.
But thank you so much for joining us.
Thank you very much.
It's been great. Stephen Alain Lawrence of Balfour Capital.